Welcome to Herd Mentality, a podcast from StoneX where we discuss global dairy markets and what's driving them. Remember that the trading of derivatives such as futures, options, and over-the-counter products or swaps may not be suitable for all investors. Derivatives trading involves substantial risk of loss, and past results are not necessarily indicative of future results. My name's Nate Donne. I'm Director of Dairy Market Insight for StoneX. With me today is John Lancaster. He's our head of dairy food consulting for Europe, Middle East, and Africa, as well as YiFan Li, who's our head of dairy in Asia. Welcome, guys.
Thanks, Nate.
There's been quite a bit going on in the dairy markets. We came into the year with prices generally trending down during the second half of 2025. We started to see a little bit of strength develop in the US in mid-December, and then late December, SGX futures caught a bid. And then prices on GDT have trended higher since then. YiFan, what's driving the stronger dairy prices in Europe? Or excuse me, in Asia?
Yeah, if we look at the price, like we always goes back to fundamental, so it will be like a supply side and the demand side. On the demand side, Asia in general is doing okay, but if we split Asia into Southeast Asia and China, China basically is becoming more and more self-sufficient in many dairy products, which include the skim and the whole milk, and nowadays even like cream and butter. But when we look at the Southeast Asia, they still have to buy a lot from the international market. Over the past half a year, 1 year, Southeast Asia, the economy in general is doing well. People they more prefer to step out of their house and eat in the restaurant. They wanted to travel a bit. So definitely is that some genuine demand from Southeast Asia can be like one of the driver push up the price. And if we look at the inventory level of the end users and also the local distributors, like in the past couple of years, they've been buying hand to mouth for a very long time. So you can definitely meet your immediate needs, but if the global market is rebounding or maybe something fundamental happened, like people need to rush into the market and cover their forward months requirement. So all of a sudden, with the global price rebound driven by some short liquidation, and the people in the supply chain, they are in a panic and they rush back into the market. So definitely that's one of the main driver. But when we look at the supply side, China used to be in a supply surplus and they're exporting to the rest of the world. Even it's not like a really huge number, but compared with the past couple of years, which China is they barely export anything. Like in the last year and the year before, China started to export a lot whole milk powder and butter to Southeast Asia. But when China kind of finding it on its way to finding its balance, that the Southeast Asia cannot buy that much is the cheap stuff from China. So they have to look at the traditional source that they are buying from, which will be definitely Europe, US, and Oceania.
And you mentioned supply a couple of times. The primary supplier for the region is New Zealand. What does milk production look like for New Zealand right now?
I think so far New Zealand's new milk production looks pretty good. The pasture growth index is better than the 5 years average. And I think if I remember correctly, over the past couple of weeks, it's even better than the most of the year before. So supply side, that's something I think confused the market or maybe confused the people who are doing day-to-day trading a bit, because that if we look at the supply side, it's people will argue that it's enough supply. Why don't all of a sudden the market goes up? But we should look at the balance again, because dairy is in a very tight balance, just a 1%, 2% demand recovery, which you may not find immediately on the import or export statistics, may give the market a huge boost.
We've also seen prices strengthening in Europe, John. Although the increases have been smaller than what we've seen in the US and in Asia, what has kept those European prices a little bit depressed compared to Asia?
Yeah, I think it's the amount of milk production that we've been having in Europe. For the last, really since the late section of the summer, we've been running really strong on milk production from all of the major producers in Europe, pretty much. We have had, I suppose, a couple of different factors feeding in that: good margins for the farmers with the high milk prices and relatively low feed costs. And we had a shift in calving because of the blue tongue issues, which is a disease affecting cattle, that reduced or shifted the calving dates for 2025 and meant that our peak last year, which for Europe is between April, May and into June, got shifted a little bit later. So we ended up with more milk production through the autumn and the winter and into the spring here as well. So the combination of all those things has kept milk production relatively strong. The spot markets for skim milk concentrate, which goes into skim milk powder, which is one of the major exporters from Europe, has been very depressed. So pretty much you could take from that the powder production capacity to dryers have been running at full blast as much as they can, because otherwise the economic incentives are really disadvantaging you selling it into the spot market. You're making a loss. And then on the cream side, that had been relatively weak, but it has rebounded somewhat in the early part of the year here. Probably a couple of different factors. The sense of unpredictability about the European butter market. Any kind of movement up in prices gives some fear factor to the buy side. And we're moving into Easter and Easter demand piece as well. I think one of the things in the kind of the bigger picture, you mentioned at the very start there, kind of the driving factor to start this, but I think it's very interesting that we started really with a protein-driven price rise, which has basically moved into pretty much the whole dairy complex, starting with the US non-fat, then moving into the protein side for skim milk powder and whole milk powder in New Zealand and Europe as well. But we're producing on a global level from the major exporters plus 5% on milk production at the moment. So to YiFan's point around, small differences in milk production can make a big difference, or even milk production or demand. All other things being equal, we would expect a relatively soft market at the moment, but we are seeing pretty good strength across the board.
Everyone, yeah. On the U.S. side, like with Europe, we have milk production running 4 or 5% above year-ago levels. The expectation was we'd be producing a lot of non-fat dry milk, and the demand for high protein, ready-to-drink milkshakes has been so strong that the liquid skim is going into that product and not being dried. And that's where the strength started to show up in the U.S. market in December. The non-fat futures and non-fat spot market stopped going down and then started going up because the supply just wasn't there, and people were expecting very strong supply.
And this is feeding in on the back of Ozempic demand, or Ozempic-induced demand, and the other GLP-1 drugs, and the halo factor that's sitting around protein products as well at the moment.
So we've had these sharp increases in dairy prices over the past 2 to 3 months. 20% to 60% for some products like U.S. butter. But in the past week, with the conflict in the Middle East, like you mentioned, YiFan, the Middle East is a significant dairy buyer. What have you heard, or what are you expecting around Middle East demand with all of the issues there?
I think when we're talking to most of the Asian clients, they always say our price is the most important, but in fact we know it's not. So as a procurement guy, is that definitely on top of your priority list is the secure of the supply chain. So you need to make sure is that you booked enough cargo from the correct region, or is the safe region, to make sure that your factory have enough raw material to produce your finished product. It's nothing about profit. So if everything goes on fine, it's like definitely, no matter we're talking about China, no matter we're talking about any country in Southeast Asia, the price can be the most important. They can even like compromise the quality a little bit, but like during the, I mean, like when we see the news, we know that it's that the regional conflict is happening in Middle East. So when I talk to most of the procurement officers, they're telling me that no matter is that the price is high or low, like we need to make sure that we have enough supply, right? So because that if like Southeast Asia, China is that if you want to buy from Europe, definitely is that go by the like the Red Sea is the most convenient route. But if you reroute that to like South Africa, definitely it will gives you another at least 7 to maybe 14 days extra leading time, and the cost, the freight of cost definitely will be like even higher. And like for trading company, for distributors, like they're more sensitive than the end user, because that what they hate the most is the uncertainty, because they don't want to like during when the time arrived is that when they need to deliver the product to their client and the cargo is not arriving yet, it gives them a lot of uncertainty. So they will compromise their profit a bit, and maybe it's that they want to buy more from Oceania or maybe even America.
I think one of the interesting pieces, and you see this when we get war, is obviously the ultimate uncertainty, but general uncertainty, that companies have a tendency to increase their buffer stocks or their safety stocks. With the amount of milk production, like we were saying earlier, normally you would not expect to see prices rising, but the Middle Eastern conflict one has been kind of on a slow burn risk for the last month and a half at this stage. So part of me kind of feels that maybe some of this has been due to the support, especially in the powder markets initially, has been due to additional safety stocks being held by individual companies. And to YiFan's point, that where the safety stocks have been brought down, or the stock levels in general have been brought down to very low levels, once you start building those up quickly, you can very easily overwhelm at least the short-term supply available into the market.
Last week in my weekly report and my weekly video, I did a deep dive into the dairy trade flows in the region, and it was about 6% of internationally traded dairy products flow through the Strait of Hormuz, and that's effectively cut off at this point. A 6% drop in global demand is huge. You're talking about maybe on the low side, a 20% impact to dairy prices. On the high side, maybe a 50% impact to dairy prices. Like you said, YiFan, small changes in supply or demand have a big impact on price, right? And I think we must be seeing some level of safety stock building in other parts of the world to keep this thing supported. But once those safety stocks are filled, and if the strait's not opened yet, it could get bad for dairy pricing. Europe's particularly exposed with most of that product that goes through the Strait of Hormuz coming from Europe, and then New Zealand secondarily.
And the Red Sea as well, with the insurance implications.
And that's the second part of it, is that the longer shipping times that you mentioned, YiFan, is as long as the Red Sea remains fairly closed, right?
Yeah, but when we look at it, it's like the product by product. I think the current Middle East issue may or may not is that the push all the commodity price up. In my point of view, I think it will be more diverse. For example, like homemade powder is mainly served by New Zealand, so China, like more than 90% of the homemade powder China buying are from New Zealand. Southeast Asia, like more or less around the similar number, but when we look at the skim milk powder, they can buy from almost everywhere, as long as like the duty cleared price is competitive, right? And when we're talking about butter, they have like maybe some other alternatives. Just for example, Middle East was buying a lot Indian butter. And when I was talking to some the Chinese processors, they're saying that we're not competing with the Europe, we're not competing with the Oceania. We're basically competing our butter with the Indian dairy processors. So some of the country is like, they're not like a consistent, like mainstream exporting region. But when we talk the like product by product, I think each product will have its own fundamental, and the price movement will be more diverse.
One of the pieces of work that you did on that report last week I thought was really interesting was the exports from Iran, which we don't normally really consider as a major exporter, but the quantities, when you think of all the overland routes out of the country, actually add up to a reasonable amount of dairy volume into those local markets.
Yeah, we could see some interesting reordering of dairy trade if the Strait of Hormuz stays closed for an extended period of time. I want to thank you guys for your time today. And if your company's facing dairy exposure, dairy market risk, we encourage you to take a look at StoneX Plus. It's our interactive dairy data platform where you can find supply, demand, and price data, as well as our dairy market intelligence that includes weekly videos, analysis, daily reports, price forecasts for dairy prices around the world. And you can find all of that on stonex.com.
The StoneX Dairy team spans the US, EU, Asia, and Oceania, providing market intelligence, analysis, and forecasts through our interactive data platform called StoneX Plus, as well as full-service brokerage on the major dairy exchanges, the CME, EEX, and SGX. If you're interested in finding out more about our market intelligence or brokerage services, you can find more information on stonex.com.
This communication is issued in the European Economic Area by StoneX Financial Europe SA, SFE by the SFE presenters noted. StoneX is the trade name used by StoneX Group Inc. and all its associated entities and subsidiaries. StoneX Group Inc. companies provide financial services worldwide through its subsidiaries, including physical commodities, securities, exchange-traded and over-the-counter, under derivatives, risk management, global payments, and foreign exchange products in accordance with applicable law in the jurisdictions where services are provided. References to certain over-the-counter products or swaps are made on behalf of StoneX Markets, LLC SXM, a member of the National Futures Association NFA and provisionally registered with the U.S. Commodity Futures Trading Commission CFTC as a swap dealer. SXM products are designed only for individuals or firms who qualify under CFTC rules as an eligible contract participant and who have been accepted as customers of SXM. Wealth management is offered through SA Stone Wealth Management Inc., member FINRA/SIPC, and SA Stone Investment Advisors Inc., and SEC Registered Investment Advisor, both wholly owned subsidiaries of StoneX Group Inc. StoneX Financial Limited SFL is registered in England and Wales, company No. 5,616,586. SFL is authorized and regulated by the Financial Conduct Authority registration number FRN 446,717 to provide to professional and eligible customers including arrangement, execution and, where required, clearing derivative transactions in exchange-traded futures and options. SFL is also authorized to engage in the arrangement and execution of transactions in certain OTC products, certain securities trading, precious metals trading and payment services to eligible customers. SFL is authorized regulated by the Financial Conduct Authority under the Payment Services Regulations 2017 for the provision of payment services. SFL is a Category 1 ring dealing member of the London Metal Exchange. In addition, SFL also engages in other physically delivered commodities business and other general business activities which are unregulated and not required to be authorized by the Financial Conduct Authority. StoneX Financial Europe SA, SFE is a securities trading firm registered in the Grand Duchy of Luxembourg under Company No. RC Lux B 10821. SFE is authorized by the Luxembourg Ministry of Finance and regulated by the Commission de Surveillance du Secteur Financier registration No. P00000-012 to carry out, inter alia, the activities of investment advisor, portfolio manager, professional acting on own account, broker in financial instruments, and commission agent. StoneX Financial Pte Ltd Co. Reg. No. 201130598R SFP is regulated by the Monetary Authority of Singapore and is a capital market service licensee for dealing in capital market products, an exempt financial advisor for advising on investment products and issuing or promulgating analyses/reports on investment products, and a major payment institution for cross-border money transfer service. StoneX Financial HK Limited C. No. BCQ 152 SHK is regulated by by the Hong Kong Securities and Futures Commission for dealing in futures contracts. StoneX Group Inc. acts as agent for SFL in New York with respect to its payment services business. StoneX Financial Thai Limited, SFA Akin, 141774727 holds an Australian financial service license and is regulated by the Australian Securities and Investments Commission AFSL 345646. StoneX Securities Co. Limited, SSJ Co. Reg. No 0104010471999 is regulated by the Japanese Financial Sir. ISIS Agency as a Taipei Financial Instruments Business Operator Kanto Local Finance Bureau FIBO No. 291 is a member of the Financial Futures Association of Japan for dealing and broking FX and FX option transactions, and is a member of the Japan Securities Dealers Association for dealing and broking stock indices and option transactions. The information herein is not a recommendation to trade nor investment research or an offer to buy or sell any financial product. It does not take into account your particular investment objectives, financial situation, or needs and does not create a binding obligation on any of the StoneX Group Inc. of companies to enter into any transaction with you. You are advised to perform an independent investigation of any transaction to determine whether any transaction is suitable for you. This material should be construed as the solicitation of an account, order, and/or services provided by the FCM division of StoneX Financial Inc., SFI NFAID 0476094 or StoneX Markets LLC SXM NFAID 0449652 and represents the opinions and viewpoints of the individual authors or presenters and does not necessarily reflect the viewpoints of SFI or SXM. It does not constitute an individualized recommendation or take into account the particular trading objectives, financial situations, or needs of individual customers. Additionally, this material should not be construed as research material. The trading of derivatives such as futures, options, and over-the-counter products or swaps may not be suitable for all investors. Derivatives trading involves substantial risk of loss, and you should fully understand the risks prior to trading. Past results are not necessarily indicative of future results. All references to and discussion of OTC products or swaps are made solely on behalf of SXM. All references to futures and options on futures trading are made solely on behalf of SFI. SXM products are intended to be traded only by individuals or firms who qualify under CFTC rules as an eligible contract participant ECPA and who have been accepted as customers of SXM. SFI and SXM are not responsible for any redistribution of this material by third parties or any trading decisions taken by persons not intended to view this material. Information contained herein was obtained from sources believed to be reliable, but is not guaranteed as to its accuracy. Contact designated personnel from SFI or SXM for specific trading advice to meet your trading preferences. SFP may distribute analysis/report produced by its respective foreign affiliates within the StoneX Group of companies pursuant to an arrangement under Regulation 32C of the Financial Advisors Regulations. Recipients should contact SFP at 656-309-1000 for any matters arising from or in connection with this podcast. No part of this material may be copied or duplicated in any form by any means or redistributed without the prior written consent of StoneX Group Inc. The podcast herein is not directed to or intended for distribution to or use by any person or entity who is a citizen or resident of or located in any locality, state, country, or other jurisdiction where such distribution, publication, availability, or use would be contrary to law or regulation. Copyright 2024 StoneX Group Inc. All rights reserved.